Morning. So a slight delay here. How are we doing today? Thursday, February 8th. Hope you're all doing well. Welcome back to our channel. And a few things to talk about, right? Markets ripping into a new all-time high for the billionth day in a row, right? The S&P 5,000 futures above the 5,000 area. Geez, one second, what's going on here? So let's see here, because I don't know. Maybe this is on, maybe it's not on, but the S&P, right? Futures hit through that 5,000 level. Wall Street hits another milestone. The S&P 500 continues to charge higher and higher, powered by a robust earnings season. Corporate profits and upbeat guidance are showing healthy spending patterns among consumers and business alike, while AI momentum just appears to justify the massive valuation seen in the tech sector. Coming up, the S&P 500 is a just slight whisker away after closing at 49.95 on the SPX, right? Very, very close to that 5,000. The S&P 500 futures cracked that 5,000. We burst through. The SPY is very, very close to that 500 marker as we've continuously just pressed new highs on a day-to-day basis without as so much as even a minor pullback, it seems. So we climbed as high as 49.99 on the SPX during the session. So in terms of a bigger picture outlook on this, despite Jerome Powell, Fed chair, ruling out a cut in March, it's clear that the end of the hiking cycle is around, unless some kind of incoming economic data throws a curveball at the central bank. Traders continue to celebrate that in style, especially, right, if you're holding off on policy easing guarantees a significant softer landing for the U.S. economy. Some of the latest figures have continued to boost sentiment, right? We saw GDP growth expanding 3.3% in Q4. And another 335,000 jobs added in January, highlighting the strength in the macro story all in all. So the question is, right, will the bulls continue this market to be and propel it upward by a handful of mega cap names that generally over the rally, right, the broader rally have supported this whole thing, right? If you look at the equally weighted S&P 500, it's not tracking necessarily that high, right? The Magnificent Seven continue to hold things up, and there should be plenty of opportunities between now and March for the next leg in this bull, realistically. So by the numbers, only a month into the new year, the S&P is up just shy of 5%, 4.7%, which is more than halfway towards the 9% average annual return that we've seen over the past 2 decades. Some fear of missing out and late buying may also be taking place among investors who have missed out on the big rally last year when the benchmark index soared more than 24%. Top heaviness could be a concern given that the 5 largest stocks, Google, Amazon, Apple, Microsoft, and Nvidia, account for about 27% of the S&P, but that has been going on for some time and hasn't stopped the index from hitting 3,000 in 2019 and only 2 years later 4,000. So massive run up there. If we look at treasuries, right, treasuries and equities generally have somewhat of a lockstep trot going on to the upside, but if this decides to load, maybe we can look at TLT. There has been some recent, right, pullback on treasuries. They haven't had quite the spectacular year as the equity market and have been kind of pulling down as of recent, signaling strong investor demand despite the auction's large size. The U.S. government on Wednesday sold a record $42 billion of 10-year notes at a lower than expected yield than the past 6 auctions, and the Treasuries Quarterly debt refunding will be completed later today with the auction of $25 billion of the 30-year bonds, which analysts believe is the biggest test as it's longer an interest rate risk. So a lot of analysts and traders alike feel that bond investors will be motivated to take advantage of the current higher rates if Wall Street is convinced that the rates will go down soon, right? So realistically, that should propel upside momentum in bond prices. So we'll see how that kind of comes out today. Some of the earnings news, right? Disney yesterday came out with a very surprising and splendid gap to the upside, right? We're coming into levels that we didn't see since the beginning of 2023, right? A strong gain of about 7% right now, trading just under $107 a share after posting earnings that landed on the high side of expectations and offered upbeat guidance as ongoing cost cuts pay off, right? Disney Plus, on the other hand, core subscribers shrank by 1.3 million sequentially, an unsurprising result given price hikes on the service. Besides headlines surrounding Fortnite maker Epic Games and Taylor Swift, CEO Bob Iger said that the renewed strength of all businesses from sport and entertainment to experiences sets the stage to boost shareholder returns, and the media giant also raised its semi-annual dividend by 50% and announced that it will start buying back shares for the first time since 2018, prompting this expected upside that we've seen in this market. In terms of other news, there's not too much as we continue this epic rally in this equity market. Right now, this S&P is holding strength pretty well. We got a slight little pullback on the overnight session after just bursting through that 5,000 level on the futures yesterday throughout the morning session, and little pullback gets bid back up around that 505, 504 level on the S&P 500 futures, which is important because that area is a level that many traders on the short side got very trapped into the end of yesterday's session, right? The afternoon session, something to watch for. We have two levels where I'd expect to see some buy side try to hold out, right? Very key levels around 5003 to 05 on the S&P 500 futures, and all the way down into 489, right? It's a pretty decent drop from where we're sitting at right now, but that area is an area of interest to see if the buyers can step in and really push those shorts that got trapped yesterday to the brink of just explosion. So I'm still relatively bullish. I'd rather see some kind of pullbacks. Ideally, this overnight pullback into the 5005 area, plus or minus a few points, holds out to see maybe a potential new high. But a lot of volume has been clustered at the tops. There are poor